1099 contractor classification, the 50,000 penalty my client faced, and new 2025 rules. A client of mine just got hit with a $50,000 penalty from the Department of Labor because they misclassified just 3 workers as independent contractors instead of employees. And with the rules changing again in 2025, every small business owner needs to understand this immediately. What I'm about to share could save your business from bankruptcy. Hey everyone, I'm Bev, and I've been a bookkeeper for over 30 years. In all that time, I've never seen business owners get hit harder with penalties than they do for worker misclassification. The rules just changed again in May 2025, and honestly, it's creating more confusion than ever. Today, I'm breaking down exactly what you need to know to protect your business, including the new enforcement changes that most business owners haven't even heard about yet. Let me tell you about Sarah. She owns a marketing agency and hired 3 freelancers to help with client projects. She gave them 1099s, thought everything was fine. These freelancers worked from home, used their own computers, set their own schedules. Seemed like textbook independent contractors, right? Wrong. The Department of Labor investigated her business and determined these 3 workers should have been classified as employees. The penalty? $50,000 in back wages, overtime, and fine. Plus, she had to pay the employer portion of Social Security and Medicare taxes, unemployment taxes, and workers' compensation premiums. Sarah's mistake wasn't that she was trying to cheat the system. She genuinely thought she was following the rules. But the rules are way more complicated than most business owners realize, and they keep changing. Here's what most business owners don't know. The rules literally changed again in May 2025. Back in March 24, the Biden administration put in place really strict rules that made it much harder to classify workers as independent contractors. But on May 1st, 25, the Department of Labor issued what's called a Field Assistance Bulletin, essentially saying, we're not going to enforce these 2024 rules anymore. Now, here's where it gets confusing, and this is critical. The 2024 rules are still technically on the books. So if a worker sues you in court, they can still use those stricter 2024 standards against you. But if the Department of Labor investigates you, they're using the older, more business-friendly standards from 2008. It's like having 2 different speed limits on the same road, depending on which cop pulls you over. This is creating a nightmare for business owners trying to stay compliant. Federal level, Department of Labor investigations, they're now using what's called the economic reality test from 2008. Here are the key factors they look at. Number 1, control. Who controls how, when, and where the work gets done? If you're telling someone exactly how to do their job, setting their schedule, requiring them to work at your location, that screams employee. Number 2, financial investment. Does the worker invest in their own money in equipment, tools, or facilities needed for the job? True contractors usually have significant business investments. Number 3 is relationship permanence. Is this an ongoing relationship or project specific? The more permanent and ongoing, the more it looks like employment. Number 4, skills and independence. Does the worker use specialized skills that they market to multiple clients? Or are they just following your processes? Number 5, integration. Is their work integral to your core business? If you're a restaurant and they're cooking food, that's integral. If they're designing your website once, that's less so. The IRS test, which is still in effect, has their own 3-category test that changed. Behavioral control. Do you control what the worker does and how they do it? Financial control. Do you control the financial aspects of the worker's job? Type of relationship. How do you and the worker perceive your relationship? And here's the kicker. You can pass the Department of Labor test, but fail the IRS test or vice versa. Different agencies, different rules. Now, if you think federal rules are confusing, wait until you hear about state rules. Many states have their own classification tests, that are often stricter than federal rules. California's ABC test is the harshest. To be an independent contractor, you must prove all three of the following. 1, you don't control their work. 2, their work is outside your usual business. And 3, they have an independent business in that trade. Other states like New Jersey, Massachusetts, and Illinois have adopted similar strict standards. Some states, you can have 10 independent contractors, move to another state, and suddenly they all have to be employees under that state's rules. Based on my 30 years of experience, here are the red flags that will get you in trouble. Number 1, the only client problem. If someone works only for you and has no other clients, that's a huge red flag. True contractors have multiple income sources. Number 2, setting their schedule. If you're telling them when to work, especially if it's regular hours like 9 to 5, that's employee territory. Number 3, providing all the equipment. If you give them a computer, a phone, a desk, software licenses, basically everything they need to do the job, they're probably an employee. Number 4, training and supervision. If you're training them on your specific processes and supervising their daily work, that's not contractor behavior. Number 5, integration with your team. If they attend all your staff meetings, have company email addresses, and are listed on your website as staff, the IRS and DOL will see them as employees. Let me break down what misclassification actually costs you. At the federal level, back wages for overtime you should have paid, your portion of Social Security and Medicare taxes, which is 7.65%, federal unemployment taxes, and penalties that can be 20% of the taxes owed. At the state level, state unemployment taxes, which can be 2 to 8% of wages, workers' compensation premiums, state penalty fees. California charges up to $25,000 per worker. Here's a real example. If you misclassify one $50,000 a year worker, you could owe $3,825 in FICA taxes, $420 in federal unemployment, $2,500 plus in state unemployment, plus penalties and interest. That's nearly $7,000 for one worker for 1 year. Multiply that by multiple workers and multiple years, and you can see how my client got hit with $50,000. Here's how to protect yourself. Document everything. Have written contracts that clearly outline the independent nature of the relationship. But remember, a contract alone won't save you if the actual relationship looks like employment. Number 2, the multi-client test. Encourage your contractors to have other clients. If they only work for you, that's a massive red flag. Number 3, project-based work. Structure relationships around specific projects with clear start and end dates, not ongoing daily tasks. Number 4, let them control how. Give them the outcome you want, but let them determine how best to achieve it. Don't micromanage their methods. Number 5, regular classification audits. At least annually review all your contractor relationships. Ask yourself, if the DOL showed up tomorrow, could I defend this classification? 6, get professional help. Work with an employment attorney or experienced bookkeeper to review your contractor agreements and relationships. It's way cheaper than penalties. Don't forget the paperwork requirements. Before you pay anyone, get a completed W-9 form with their correct legal name and tax ID number. Verify the information. Wrong TIN numbers can lead to backup withholding. Annual requirements, make sure you issue a 1099 NEC form by January 31st for anyone you paid $600 or more. File copies with the IRS by January 31st. It used to be February, but that's changed. Keep records for at least 4 years. Missing 1099s can cost you $310 per form if filed late, and up to $890 if you never filed them. If you're watching this thinking, oh no, I might have misclassified workers, here's what to do. Don't panic. Voluntary reclassification is usually better than getting caught. Review it immediately. Look at each contractor relationship using the tests I described. Consider voluntary classification settlement program. The IRS has a program where you can voluntarily reclassify workers and pay reduced penalties. Get professional help. This is not a DIY situation. The cost of professional advice is nothing compared to the cost of getting it wrong. Document your analysis. Keep records showing why you classified workers the way you did. Good faith efforts matter if you're ever investigated. Here's the bottom line. Worker misclassification is one of the easiest ways to destroy a small business. I've seen companies go bankrupt over this issue. The rules are complicated, they keep changing, and the penalties are severe. But with proper planning and professional guidance, you can structure your contractor relationships legally and safely. Don't be like Sarah, who thought she was doing everything right and got hit with a $50,000 penalty. If you found this helpful, please hit the thumbs up button and subscribe for more small business protection tips. Drop a comment below and let me know. Do you currently use independent contractors? What questions do you have about classification rules? I read every comment and often turn them into future videos. And remember, when it comes to worker classification, when in doubt, get professional help. Your business depends on it. Thanks for watching, and I'll see you in the next video. Stay safe out there, business owners.